Okay, Tia, so let's talk about the different tax returns. So obviously I am a business owner, so getting a loan has been tricky for us at times because you have to be in business for a certain amount of time and depending on what you're writing off and all of those things. So obviously we have the people that work a normal 8 to 5 and they're reporting to somebody else. How many years do they have to be at that job? Or can you tell us a little bit about timelines and how many tax returns and all of that?
Sure. So industry standard is about 2 years. You want to have 2 years of employment history, 2 years self-employment history. For the first-time buyers, they can use, if they're younger and they've been in school and then they're newly into their position, you can use schooling as a part of your 2-year history. So let's say you went to Boise State for a year and you've been in your nursing job for a year, that counts as your 2-year history. There's gonna be some scenarios for our self-employed people that can get away with 1 year on the self-employed, but for a later conversation, industry standard is about 2 years. And we'll tailor it. If there's a chance that we can get shorter, we'll go for it.
Okay, I love that. So if you are somebody that has an S Corp or has an LLC and you haven't been in business long enough, what I'm hearing is it's still worth reaching out and having the conversation because every scenario is unique to that person and lenders understand that.
More than anybody. And we see, obviously, we're looking at tax returns all day long, every day. And if you have a CPA doing your taxes, the CPA's job is to limit your tax liability, which could not be beneficial for the mortgage lending side, but we're gonna go through that. So even if you've only been in business for 1 year and you wanna buy in another year, we wanna make sure you're doing the right things to come to qualify.
Right. I've had a buyer that is really excited to purchase. They've been trying to work on their credit. They had like a 550 credit score or something. So they've slowly been trying to get their credit up, doing the whole Credit Karma thing, taking recommendations. But recently I connected you with a buyer that was kind of in that position. And can you talk a little bit about maybe the answers not right now and maybe what the next 6 months to a year look like?
Yep. So when we go through those first conversations, we're going to look at everything. I like to start with soft pulls on credit, so it doesn't count as a hard inquiry, but I can see everything that's reporting to credit. I can see if there's any derogatory credit, collections, I can see scores, I can see the whole 9 yards. And we can say, if you pay off this item, your score is gonna do this. If you pay down this loan or pay off this, how it's gonna impact your qualifying. So that allows us to give a timeline on, maybe it's a no right now, but do what I say, and in 6 months, you can be a homeowner, or maybe it's gonna be 3 months, or you just have to pay off one little item, so it's just the next reporting. But it gives us a timeline and an exact task list for the borrowers to do.
Right. It's kind of going back to that mindset thing that if you didn't ever learn this stuff, now can be the time to learn. Like, I think that what I didn't understand about credit in the past and what I understand now is if you pay your bills on time and don't use the majority of your credit, then you're going to have a great credit score. So I think that they can learn those things now, and if starting with a lender of, hey, I want to own a house in the next year, how can I get there? That's also a reason to reach out to Tia.
100%.